Welcome to the Up Education Podcast, where we help you cut through the noise of the financial markets and focus on what really matters for long-term, principle-driven investors. This is episode 1, and I'm thrilled you're here. Every week, we'll bring you the biggest stories from the stock market and explain how smart investors should respond, not react. We don't chase hype. We're not meme traders. We are value investors. And as Benjamin Graham once said, investment is most intelligent when it is most businesslike. We care about buying $1 worth of value for less than $1, and that mindset has never been more important than right now. This week, one of the biggest stories in finance wasn't earnings or economic data. It was a full-on billionaire battle between Elon Musk and Donald Trump. Now, these two were best buddies not long ago. Musk was helping shape policy. Trump was praising Tesla's innovation. But that all changed, fast. Last week, Musk accused Trump of covering up the Epstein files. Yes, you heard that right. And Trump hit back by threatening to cut $2 billion in federal contracts and subsidies going to Musk's companies, including Tesla and SpaceX. What happened next? Tesla stock dropped 14% in one day and over 20% for the week. That's a nearly $200 billion market cap wipeout, over a Twitter fight. But here's where smart investors step back and ask the right question. Does this change the value of Tesla's future cash flows? Because remember, a stock's value is a representation of all future free cash flows, discounted to today. And right now, the stock price moved, but the fundamentals didn't change overnight. Let's look at the numbers. In 2021, Tesla made $53.8 billion in revenue and $5.5 billion in profit. Fast forward to the last 12 months, revenue hit $95 billion, and profits are just over $6 billion, so yes, the business is growing. But here's the issue. The valuation still assumes sky-high growth and visionary leadership, and when that leadership becomes unpredictable, the premium gets punished. It's a perfect example of the old saying, it's not what you buy, it's what you pay for it. Even a great company can be a bad investment at the wrong price, and right now, Tesla trades at over 150 times earnings and over 140 times free cash flow. That's nosebleed territory. If the story falters even a little, the price crumbles. This is why we talk about margin of safety. If Elon Musk's reputation can erase $200 billion in a few days, ask yourself, were you investing in a business or a personality? But there's a much bigger concern quietly building behind the drama, and that's the risk of a U.S. credit downgrade. Trump's new legislative proposal, the so-called One Big Beautiful Bill, could add over $2.4 trillion to the national debt over the next decade. That's on top of an already eye-watering $36 trillion in debt. Now, this isn't political, it's mathematical. Credit agencies are watching, and if the U.S. gets downgraded from AAA to AA, markets will react. Because a downgrade means higher interest rates, more expensive borrowing, and lower confidence in the U.S. dollar as a safe haven. If you're a long-term investor, this matters deeply. Because when interest rates rise, equity valuations fall, especially for high-growth stocks like Tesla. So while the headlines scream about Elon and Trump, the silent threat is the erosion of America's financial credibility. So what do we do as value investors? First, breathe. Don't react emotionally to a tweet or a stock crash. That's not investing. That's speculation. Second, revisit your principles. Are you investing with a margin of safety? Do you understand the actual business, not just the story? Are you buying cash flow or charisma? Because in the short run, the stock market is a voting machine. In the long run, it's a weighing machine. Right now, Tesla is losing the popularity vote, but whether it proves its long-term weight depends on the company's execution and your purchase price. We live in a time when news cycles can move billions of dollars in minutes. But here at the UP Education Podcast, we stay grounded. We don't chase noise. We build knowledge and conviction. Whether it's Musk versus Trump or macro risks like a U.S. debt downgrade, our job as investors is simple. Price the business. Be patient. Stick to principles. Thanks for joining us today. If you found this episode valuable, stay tuned. Every week we'll dive into market headlines and help you cut through hype with logic and long-term thinking. This is the UP Education Podcast, helping you become a smarter, calmer, more disciplined investor. And remember, you don't need to predict the future. You just need to pay the right price.